warm welcome, and please give your attention to the president and co-founder of the O.H.I.O Fund, Leach.
I hope the mic works better. Yeah, well, we'll see. Well, good evening, everyone. Hopefully the mic works okay. It's great to be with so many friends. I see a lot of friendly faces that I've worked with over the years. Certainly some of the Jumpstart crew is here. And this building, Jumpstart was when I was at Jumpstart, we basically had a vision to partner with the Cleveland Foundation to create this building. And so we're super excited to host everybody here. I don't know how many folks have been in this building before. Is this the first time you've been in this building? Hold up your hand. So it looks like maybe half the group. So this is the first of what we anticipate to be a dozen buildings in this neighborhood, 1 million square feet of innovation space just in Midtown Cleveland. And Jumpstart's offices were across the street for many, many years. So it's fun to be here with all of you. I could, okay, all right, so we'll see how it goes. So I'm only gonna talk for like 5 to 10 minutes. I'm gonna talk a little bit about the O.H.I.O Fund, just because to dispel some rumors maybe, or just bring clarity to this group about what the O.H.I.O Fund is about. But I really wanna talk about how important this event is, this gathering of folks are, how important individuals, networking has been in my career, and that investing in people is, so incredibly important, just as a human being, to find time to build community, which obviously can directly benefit your career, but above and beyond that can really, has dramatically enriched my life. So I'll talk a little bit about that. But first, I'll get the business part out of it. So the O.H.I.O Fund is a new fund. We're 21 months old. As of the end of last year, we had raised $350 million, something that I frankly didn't think was possible. But we just finished a new fundraising round, and I'm not going to make news tonight, but we just closed a very, very significant amount of money. So the idea that there could be a fund in Ohio that has billions of dollars of assets under management, I think, of course, Drive is already there at $2.2 billion. But I think there'll be another one in the not too distant future. So I'm really, really excited about the progress that the O.H.I.O Fund has made. As of the end of this month, the first quarter, we've now invested we've invested $250 million in 36 companies or real estate projects over the first 21 months. So that's pretty unusual and pretty exciting. But from an investment thesis point of view, probably what's most important is think of our fund as a very robust co-investment fund. That doesn't mean we won't lead a deal or that we won't be the lead investor, but an optimal scenario for us is that we are involved in a real estate transaction, a private equity or growth equity transaction, or a technology transaction. And the typical thing we're working on, the company is probably raising 20 to 50 million total. And our average check of late has been 10 to 12 million per deal. But the largest amount of capital we've invested in any single deal is 50 million. And the smallest so far has been, I guess, about 2 million. We are looking for deals. We have 800, as you can imagine, if you're investing across the whole economy, everything is an opportunity. We're happy to invest in a 100-year-old company that's maybe doing something boring but making a lot of money, and that we and our investors could co-invest or invest in that business. We are not a control investor. So we might co-invest with a control investor, but when it comes to things like growth equity, we're not looking to come in and fix a company. We're not looking to turn anything around. In our case, a lot of times our money might allow the founders or the family to take some chips off the table, but not lose control of the business. Because we think net, in many cases, private equity isn't always in the best interest of not only the family, but probably more importantly, the state. So that doesn't mean that we wouldn't co-invest, with a control investor. We may do that. We haven't done that yet, but we could very well do that. So ultimately, though, what the O.H.I.O Fund is all about is to dramatically change the capital ecosystem in Ohio. and that, 10 years from now, there'll be billions of dollars invested every year by the Ohio Fund, and also by funds. The Ohio Fund certainly has an intention to invest in other funds. So we know we're not going to be the be-all, end-all. And obviously, breaking my pickaxe against the early stage venture capital ecosystem for as long as I have, I know how important it is for the state and for entrepreneurs in the state to be able to make a lot of progress against those issues and challenges. So with all that, I guess I'd leave it on as it relates to the fund. If there's a deal out there, we're doing 2 deals a month approximately, and we're investing, like I said, on average 10 to 15 million per deal. So if there's a deal out there that you're familiar with, that you're proximate to, that you think has the opportunity, we're promising our investors a 20% annual return on their investment. In our first 18 months, our IRR has been over 100%. And that's because we're investing across the whole economy. We're investing in land deals that are being sold to hyperscalers or to manufacturers. We're investing in cash-generating companies. Maybe we're buying 10, 20, 30% of the company, so we're getting distributions. But we're also investing in tech. Probably 30 to 40% of our investments to date have been in technology businesses where we might not see a return for 3, 5, 7, 10 years. So it's really the mix of companies and projects that we're investing in that we think gives us the ability to generate those returns. So, again, we're only 21 months old. We've done 36 deals. Hopefully by the end of the year, we'll have done at least 50 to, in the low 50s. And hopefully I'll do a deal with somebody in the room, or, you're connected to one of those deals, because at the end of the day, this is really all about people. So that's a nice segue too. I was commenting earlier at one of the tables, one of the things I wish I had done in my 20s, I started my first company when I was 22, and I didn't have a board. I bootstrapped that company. I ended up having a very successful exit from that company, but it was out of sheer luck, basically. So I owned a company for 9 years, sold it when I was 31. It was when the Macintosh basically was invented. So basically that's going to be 40 years ago in 2 years. So I'm 60. So I turned it when I was 22. So 40 years ago, I happened to be at the right place at the right time when the Mac came out, and I could see that the Macintosh and product software around it was going to totally transform the graphic arts industry and the pre-press industry. And so I happened to be there, took one step at a time, ended up growing it, had a great exit. But that, and that company ended up doing hundreds of millions of revenue every year. That could have easily been a $1 billion company. And a $1 billion company in the 90s is an even bigger deal than what a $1 billion company would be today. And one of the reasons why that company didn't, I was happy with the outcome, don't get me wrong, but it could have made a much, much bigger impact if I had spent a little bit of time networking. And I spent no time networking. And obviously there was people, and maybe I would have had to go to California for some of that in the early days, in the late 80s, in the early 90s. But a lot of the greatest insights that I could have had or could have had access to, I chose, whether it was imposter syndrome, for sure. A 25-year-old kid from Akron, Ohio, absolutely would have imposter syndrome. I still have it now. So, but, it's probably the best example of a road not taken that I think about quite regularly. As many folks here may not know that Chuck Geschke, who was a co-founder of Adobe, was a professor at John Carroll. And John Warnock and Chuck Geschke founded Adobe in the early 80s. And I had the opportunity to get mentored by both Chuck and John. And I was too scared to make that happen. They offered, and I'm sitting in Akron, Ohio, running this company. The reason why they offered is Adobe was really, really young company at the time. And my company was the largest reseller for Adobe in the Midwest. But I just didn't have the confidence to be able to, I could have gone out there and it could have totally changed not just my life, but it could have totally changed the trajectory of my company. So I share that as an example of a road not taken for me many, many years ago, but there's many, many other examples that are less glamorous on the California side. A lot of the answers to the things you are working on that you're striving to get insight on and to solve for, a lot of the answers to those issues and challenges are in this room, in our community. There's people who've been there and done that. But there's also people who have never done it but have a brilliant insight. And so I really applaud everything that's happening here. And I guess maybe as a final comment, and I'm happy to connect with folks afterwards, is when I founded Jumpstart in 2003, 2004, which now feels like a long time ago, but on the other hand, it wasn't all that long ago. One, entrepreneurship was a 4-letter word in Ohio, let alone in Cleveland. If you were an entrepreneur, that meant you couldn't get a real job, basically, in the early 2000s. But when we founded Jumpstart, and none of the founding team is here, but certainly Hardik and others of the current Jumpstart team are here, we really focused on 3 things. First was what we called the Jumpstart Entrepreneurial Network, that we would do events every month in the founding, it was 16 counties of Northeast Ohio, this is way back when, because we knew that there was many, many people that had thoughts, ideas, perspectives, that if they were only shared, those people could make a lot of progress. So it's not a new idea. The second idea was basically coaching or mentoring. And obviously that's a more evolved or more structured way to make that happen. And then of course there's capital, because I think everybody in the room has an appreciation for how important capital is. And yes, capital might be as important or maybe more important in some cases for businesses to be able to take their next step. But when you boil it all down, if you're going to build a company of scale and of substance and of meaning, odds are you are going to do that with other people. Yes, there was a $1 billion exit recently with a single founder, so maybe theoretically with AI that could happen. But at the end of the day, my most meaningful experiences, hour to hour, day to day, in everything that I've done has been with incredible people. So I very much applaud this group, you and all of you, for taking the time to build new relationships, to seek out knowledge and insight from folks who maybe been there and done it, maybe who folks are on the journey along with you. But congratulations to the group.
Thank you. Thank you so much.